I hope everybody's doing absolutely wonderful. So I had a great conversation with the lady yesterday, multiple time buyer, very experienced, and she was trying to compare us to two other lenders and a lot of confusion on her part. And so I always try when I'm talking to clients, guys, to really simplify things, really just go basic meat and potatoes so that it's easy to digest, easy to understand. And here's what I told her, because she was like, hey, your rate's lower and it looks like your fees are lower, but your payment is higher. I don't understand. And so what I explained to the customer is a few different things. One, when you're looking at different fee sheets, you want to throw out everything except lender fees and the rate. Throw out the taxes and escrow, the insurance, all of the third-party fees like attorney's fees, state taxes, etc., because those fees are going to be what they are. So I kind of tell people, hey, just push those to the side, and if you want to keep it super simple and understand which lender is giving you the best deal, look at the rate and look at the lender fees. And the lender fees are going to be the ones typically listed first. Origination, discount points, underwriting fee, processing fee, things of that nature. So if you take those and add those up, and if it's the same rate, whoever's got the lower fees is the winner. Keeps it super, super simple. But then she asked me, she said, well, this lender's got a higher rate, you've got a lower rate, how do I compare those two? And I told her, you've got to keep in mind that the way mortgage rates work, this is super important, guys. There's no such thing as today's rate. What is today's rate? What is today's rate? We get that call all the time. There's no such thing. I have rates from 4.5% to 8% and everything in the middle. The easy thing to remember is the lower the interest rate, the higher the cost to get that rate. The higher the rate, the lower the cost to get that rate. So when you hear about free refinances, for example, hey, my lender did a free refinance, all lenders offer a free refinance. How they do this, if the market rate is 6% for a refinance, and let's say your rate's 7, and you're trying to refinance, instead of giving you 6, they might give you 6.3 or 6.5, and now they pay your closing costs. So the bank is paying the closing costs, but you took a higher rate to get that. That 6.3 or 6.5 is still better than the 7 you had, so it's a win, but that's how you're doing free refinances. If that person wanted to, in theory, pay some closing costs, even if they're rolled into the loan, they could choose to get a lower rate, which of course would equal a lower payment. So wanted to throw that out there, keep it really simple. We're always here to explain that to customers, guys. That is 100% our job. Our job is to go out there, earn the trust, win the business, and explain to customers exactly what they're looking at. Have a great day.